Good morning. Welcome to day 20 of trading Momo strategy in the simulator. Let's take a look at what we got going on today. VIVK up 10,000%. The fossil fuel company went from 2 way up to 5. Something about that doesn't seem right. Maybe it's not the right ticker. I'm not sure. But the S&P 500 is down a little bit since after hours Friday. It's coming back up. And US oil gapped up a little bit, but coming back down, kind of inverse of what the S&P 500 is doing, which is kind of interesting. Today it doesn't really look like there's too much on watch. The LPW is just continuation from Friday. So we'll have to see if that gets any volume. It's 7 a.m., but probably won't trade it because the LPW wasn't particularly easy to trade pre-market either on Friday. So today I'll be focusing on my position management and scaling. I have a lot of things on the go for improvement, but it'll be accuracy, position management, REMAX real estate company. It's got some volume this morning. Has 7 a.m. news. An acquisition headline. But it is a 17 million share float. We're at this daily resistance level right now. 30. I do like acquisition headlines usually. We got some high volume selling now. IAAS with some news here. It's a bit too cheap though. This one also has a edition headline. Pretty strong for a penny. 120 up to 140. It's quickly becoming our leading gainer. I'm not trading pennies though. Unless I see an obvious VWAP setup for a VWAP test, and I'm not trading it. We're just waiting. It's quite volatile. From 160 down 10 cents to 150 and spikes down to 140, 120 pretty fast. There's a bit of support there. 119. Penny has quite the range. From 120, breaks through VWAP, goes up to 138. We'll see if this gives us a proper VWAP setup here. 5 minute has a high of 138. I don't really like how every time it pops up, it gets pushed down with even higher volume selling, and we got these topping tails. If the 5 minute formed a hammer instead of a long bodied doji, then I might have been more optimistic to hop in with a starter position, but not really sure what it's going to do up here. A lot of sellers up at 140. Considering the amount of selling involved here, I'm not going to enter a position. 140 is super heavy. Someone is selling shares, whether it's the company or Interested to see how many times it could bang up against 140 before it finally breaks through or fails. You can only do this so many times or somebody gets exhausted. Getting eaten up. It finally breaks through there and goes up 10 cents. It's got a higher float. $28 million share float. Price is right, but the float is not. It is moving quickly despite its higher float, though. High volume selling on the 1 minute. Considering the float, the high volume selling, and the fact that we're at a daily level right now. And apparently they're doing an offering according to this news. So the float is going to be even higher. And it's a no-no. The only way I would consider it is if it did a nice VWAP pullback, but Oh, we're just continuing to wait. Nothing, nothing really interesting. So I'm gonna have to wait for 7:30 for news. Hey, Spooky. Yeah. Which stock you looking at for shorting? I mean, this one here, like this penny just suddenly dropping like crazy from 160 down to like 130. I get what you mean. Some of these are just have way bigger ranges to the downside today. You know what's funny? The is back when I first started, the intrusive thoughts were entering my head like, well, if I'm losing money to the long side, what if I just do the exact same thing except instead of pressing the buy button, I press the sell button. Right? It's like if I could lose this much money, doesn't that mean if I just press the short button that I would make money? Yeah, that's the way it works, right? Suddenly up 10,000% in a single candle and I'm down $1 million. Yeah, shorting is tempting, but it's too big of a risk for me. At least if I put in $1,000 or $2,000 into account, that's the most I could ever lose trading to the long side as long as I'm not using margin. I would be I would be devastated if I ever tried shorting and that happened to me where I got caught into something that I shouldn't be in and I just ended up owing thousands of dollars. Definitely not in my risk tolerance. For a while I was thinking about like, well, during a cold market, if it's a bear market, then, shouldn't you go where the water flows? It's a bear market, just short it while it's a bear market while it's cold and then go long when it's a hot market. But I mean, even in a cold market, I've seen, like, for example, NPT go up 1,000% almost instantaneously before coming right back down. Like, if you enter something and it goes up to 10,000% for even like 10 seconds, you're going to get your broker doing a margin call on you and pressing the buy button, probably up at the highs. Yeah, that's exactly what Ross said, is that their P&Ls look like cliffs, or their cumulative drawdowns, or whatever. They go up and up and up and up and up, and then whoosh all the way back down. Especially the short traders that continue adding to their positions. So, like, let's say they let's say they get in at 140, press the sell button, and then it goes up to 150. Okay, well, I'm just gonna add up here now because it's gonna come back down, right? And then it goes up to 160, and then it's like, okay, well, now we're at high day. I'm gonna add up here, and it goes up to, you know, $2, and they're like, well, surely it's it's gonna stop here. And then they just keep doing that and doing that, and it just keeps going higher and higher until eventually they just get margin called and they have to sell everything up at the peak. And their account's blown up. They owe thousands of dollars. They don't have a job now because they thought that they would be successful, shorting as a job, because they had a false sense of confidence since they've been doing that for so long and making money. But they didn't realize that their long-term P&L would, bring them back way back down. I think it's actually riskier during the opening bell with halts. Without halts, at least you have the opportunity to try and sell before you get margin called. Even if it's going up and it's difficult to get out on the bid because it's going up so quickly. But if you're in a halt, you literally cannot sell. There was a video that Raj showed one time of a stock that was just kind of selling off. It was a Chinese stock, no news, just kind of selling off. And Ross was thinking about shorting it and getting in. If you've ever seen that video. And by some grace of God, he didn't get filled on his order to the short side for like 1,000 shares. The stock halted up instantaneously and resumed at like $500 from $12. If you're in $1,000 short on that, or 1,000 shares short on that, you'd be down. How much is that? Calculator. 1,000 shares times like it was $12, so 488. You'd be down like almost $500,000 with just a 4,000 or $1,000 or 1,000 share position. Excuse me, my speech today is a little bit stuttery. Yeah, if you look at GameStop back in the big short squeeze in 2021, there were a lot of traders, not just hedge funds. GME, right? This GameStop. Like back here, the most infamous short squeeze, where it went up to $120 from, where it started. It was at like basically nothing. And the days to cover on this thing, 1, 2, 3, 4, it was like 4 days to cover where nobody could get any shares. Like nobody could get their shares filled because everyone was covering, everyone was on margin call, and it just continued going higher and higher. So if you were in down here on GameStop, because maybe you're just a retail trader or whatever, and right here, and you're like, oh, GameStop is dying. I think I'm going to take a short position. Then you just can't get out when it gaps up. You see the gap up from 37 up to like 90, like 86. I wish I was around for that, for GameStop. That'd be really cool to see. See history in the making. Biotech stock up 50%. It's a bit cheaper. 59 cents. High volume selling in the 1 minute. I think I've said I'm not really gonna touch these. Unless it gives a clean VWAP setup, but I think I'm just gonna wait for something within my price range to come out. SGMT, the float is too high. Fugro, kind of bouncing off the lows here. It does have 730 news. Issues, strategic, NASDAQ compliance headline. Like this would be a VWAP setup that I would consider getting in where it has a 5-minute hammer for the breakthrough 150, but there's just been so much selling on this YAS that it's just difficult to trust. This would be like an ABCD pattern almost. MACD curling positive. I have a feeling that the company is like selling shares or something. Or insiders are selling. Somebody's selling. What was the stock the other day that went up like crazy? CAR? And then it came, what the heck? Hold up. What happened? What happened there? Imagine being a short seller on this. Over the course of how many days? This is what they say. The bears take the stairs. Or not the bears. The bulls take the stairs. The bears take the window. Yeah. Bulls take the stairs, bears take the window. What the heck? How many days did it take for it to get up to $800 and then it finally sells off from 800 all the way down to 200 in 2 days? Even just shorting 10 shares of this up at 800, you'd be up like $6,000. Right? That's just crazy. Here, how many candles is that? It's 21 candles. So it took 20 days. So it took an entire month for this stock to climb up to 800, and it took 2 days for it to come almost all the way back down. That's crazy to me. I think it can go both ways for in terms of getting a windfall. Like sometimes you just get these trades where it's a significant windfall. Like if someone decided to enter at the very top there in CAR at 800 and they just happened to make a ton of money, then that could like kickstart their trading career, even if they don't ever continue shorting ever again. But it's the same on the long side. There was a trade that I got in the simulator on NPT. It was like for the break of 12 or something for Blue Sky, and it goes all the way up to like 20, 26 or something within a single 1 minute candle. If you take 100 shares of that, that's a lot of money just to kickstart a small account with. A few $1,000 for free. There was another one that I saw that started at like 50 cents or something, and it went up to $10 like instantly in like 20 seconds. You get in that, even with $1,000 account, you buy 2,000 shares of that, it goes up 10 points. kind of crazy sometimes. Definitely not something to count on, but it can happen. Well, that's, you never know where the top is. That's the thing. If you could see the future, you, you could be a billionaire. But people thought on GameStop, you know, oops. Like, I'm sure there are people thought that the top on GameStop was $40, but then it gapped up. And then they're like, okay, well, the top is $80 here. And then it went up to 120. So if you get in at 120, you have no idea if it's going to go up to $200 the next day. Uh, it's playing with fire. That's for sure. But this is why insider trading is so ridiculous. Imagine being told uh, ahead of time that, you know, this move on CAR would happen, and you could, so you can get in at $80 or something. If you were told like, oh, we got this big news coming out, you know, get in, and then you get in at $90, and then it goes up to 800. Yeah, it's pretty difficult. I agree. So we're coming up to 7:45 here, but I haven't seen basically anything. I haven't seen anything interesting. SGMT is grinding higher here, but it's got much too high of a float for me to be interested. It might have worked back here, but I wouldn't have expected this bear trap. I'm gonna reset my 5-minute chart. Oops. Moving really slowly. Kind of pulling away a little bit here, but from 770 up to $8. Probably gonna go sideways here again. This would have been a pretty obvious bull flag for the 5-minute here. I'm just trying to stick to my rules and not trade anything outside of my float range that I usually do well in. I think the safest way to trade for insiders would be trading large cap stocks, because large cap stocks generally have a pretty steady rate of return. Whether they're going up or down, they don't have that much volatility. But that's until news releases. So if there's some sort of big news, that's when those stocks can have a significant increase in price in a single day. It's much more beneficial on large caps than it is small caps. Also, because there's more liquidity, insiders can buy more shares. Usually, these politicians will put in, I don't know, $1 million, $500,000, or even more of money into a trade. You can't really do that with small caps. You'd be buying the entire float. But for the most part, um, large caps can be a bit more predictable. Like Intel, take Intel for example. If you suddenly have the president of the United States endorsing Intel, do you think the stock is going to go up or down? That's a no-brainer, right? And Intel, obviously down here, if you buy here right before President Trump released his statement, or whenever it was, I guess it was a long time ago now. I guess it was probably back here, September of 25, this big gap up, right? Now you buy here and it's going to go up pretty significantly. Went from 23 to almost $30, above $30 in a single day. 10 points for a large cap stock is pretty significant. If you buy 10 million shares of this and it goes up 10 points, suddenly you're up, you know, $100 million for all these war contracts, right? If you're Baron Trump and Daddy tells you that these are the defense companies that they're probably going to take contracts with, government contracts are substantial news. High chance that their stock just goes up. It's very surprising that SGMT is actually moving this much with this high of a float. And I didn't really think the news was that significant. For me, probably would have gotten in on this very obvious bull flag for the retest of VWAP, or the test of VWAP, because this is a very obvious setup for me, right? If it wasn't 28 million shares for a float, then I would have considered it, but I'm not sure. You would think that shorts would be more inclined to trade higher floats, because if you're long biased and it has a higher float, there's less, it's going to be stair stepping up, like it's going to go up very slowly. It doesn't have the potential for high returns as a low float does. And also higher floats tend to be easy to borrow, so shorts have more access to shares to sell. So usually as it's going up, shorts have more access to shares and it has more upside resistance. I think in the chat, Ross's chat says somebody said that it's easy to borrow. A lot of brokers, so it could be. I think that the sudden imbalances between supply and demand can be a little bit more frequent. Like the sudden spikes, the pops here, like these high floats, they kind of go sideways until there's eventually capitulation. And then it goes up like 50 cents. And then it goes sideways. And then it goes up, another 50 cents. And then it goes sideways. I think like it has the potential to go up. But for Ross's strategy, like he has to anticipate the pops, or if it pops up and he gets in here for the first pullback, like he's not making as much money as he usually does. In this case, it went up another 50 cents after this pullback, but it usually goes up like 50 cents and then goes sideways. That could be the case too. If you have a higher float, you can take more shares. But it's also very risky because you take 500,000 shares for a position. There's no guarantee that you're going to be able to fill 500,000 shares like up here without significantly tanking the price and then getting a ton of slippage. But who knows? I've never tried it before, so I wouldn't know. That's possible. I'm not really sure though. If it's really obvious setups like this, I mean, I could consider trading higher floats because I have a strategy for VWAP setups that isn't quite like what Ross does. I think I've talked about my theory of exit indicators before, that you can just continue holding a position until you see one of four exit indicators. Like if I bought at the peak of this 5-minute candle at 760, expecting the breakthrough high of day, there wasn't an exit indicator here until like up here when the shooting star happened. So I theoretically could have held from 760 all the way up until like 860, $1 a share. I think I've learned that if it's green like this, a green shooting star like this, it still has the potential to go higher. But if it's a red shooting star, then it's pretty much the end of the move. My unverified theory. Oh, there's probably somebody who has a strategy that they're not willing to share out there that has significant profit on high float stocks. Or maybe they're sharing it and I just don't know where to find that information. Yeah, if it's a green shooting star, it probably will come back up to retest. And if it double tops, then that's where the move ends. But if it breaks through, then it can continue going higher. It's very bullish. So I think I agree with that. And then a red shooting star is like, oh, that's probably the end of the move because now it's high volume selling. It doesn't look good on a chart. The only problem for me trading high float stocks, if I were to test this theory, which is why I haven't really done it before, is because of how long you have to hold. Your buying power gets used up while there's potentially something else that could come out. So if I get in at the peak of this candle, then I'm basically holding for 13, 14 minutes here. At which time, like maybe something comes out at 7:45 that's much better and I can earn more on it. But this is like taking up my buying power and my time. Like, yeah, I guess I could have earned like maybe 50 cents, $1 a share here, but what if something comes out that goes parabolic and then I make like $5 a share on it? Oh yeah, that's kind of a tweezer top, you're right. We got a minute 30 to 8 a.m. Hopefully we get some news. That's probably something I should pay more attention to. I know about tweezer tops, but I've honestly never really paid too much attention to them. Maybe that's something I should pay more attention to because it makes sense. If you look at it on the 10-second, it makes sense here, right? Comes up, fails at a certain level of resistance, comes back down, bounces off the 9, fails again. I mean, that's a double top in its own sense, right? It's just a double top on the 10-second instead of a double top. I mean, it is on the 1 minute too here, but double top, tweezer top, I guess they're kind of the same thing. This one has a 12 million share float, but it's moving pretty quickly. It's only up 8% though. Some sort of continuation setup here. Above 920. 12 million share float. I don't know if I'm interested in this one. I'm being really picky with my setups, but I don't think I'm being overly picky because even Ross has no trades today. I'm trying to improve my accuracy by picking the right stocks. This market has just not really given us anything. Here's another high float stock. Is this the same one that I was looking at earlier? The heck? Look at the obvious bull flags on the 5-minute. SGMT? Obvious bull flag? Very interesting. Yeah, nothing worth trading. Reassures me to know that I'm not the only one that thinks that there's really nothing going on. I feel bad for sitting here and like not trading anything, but at the end of the day, can't really do much about it unless I want to go red. Like if I were to trade these obvious setups on the 5-minute here, like obviously I could have made some money on them. But is it the right decision to do that? Probably not. That's typically why I only consider stocks that are $1 around VWAP, these VWAP setups, or high float stocks that are VWAP setups. Because if you look at the 10-second back here, so the end of that candle is about right here. VWAP was like 117. You probably get in like on an entry candle right here, or you could even take a dip. Like as soon as the candle ends, you could take a small starter right here as the 9 crosses over. Then you have 3 levels of support here. So 120, stop is like 117. or you can make stop VWAP, but if you get out below VWAP, then it's capitulation. But you just add and snowball as it continues going higher here. Sell half as it reaches resistance, and then you just hold for the rest of the way, and you don't really have to worry about it dipping down because since your entries were like back here, you could still get out break even if it like if it dips all the way back down here, but your in average is like 120, you still have a little bit of room to get out break even. You already made a little bit of profit if you sell half. Yeah, I've never watched the large cap classes. It might be worth going back to take a look at them. It might confirm some of the theories I have about trading stocks like this, where you're holding. I've kind of leaned into doing the small cap stuff because I believe that I have the aptitudes. I have the right aptitudes to be able to trade it successfully with enough practice. Like I have good hand-eye coordination. I'm very familiar with the computer because I've been gaming basically all my life. And in the competitive scene at that, so I have enough of a reaction time to do it. So I always figured that if I have the right aptitudes, small caps trading like Ross would probably make more money. What is probably worth exploring anyways. I'm still only 8 months into trading, so I don't have enough experience yet to be able to just disregard rules to take certain trades. Like looking back, this is very obvious, but Ross doesn't even trade these, right? If he can't trade these and make money, then how can I expect to trade them and make money consistently from, a strategy that he's back tested for 8, 10, however many years he's been trading, 15 years. So on one hand, like I want to experiment and stuff, which is why I did that experiment with pennies for a little bit. But then almost every penny I got into while I was trading it just tanked and lost me like $50 to $100 in the sim. And then the moment I don't trade a penny, like we see this stock going up like this is weird. Yeah, I think I'll take a look at those classes. I actually did watch some prop firm YouTube videos to like kind of look at large caps, but I thought it was more of a hopeless game. I think even these stocks that have 36 million shares, like the ones that I'm looking at, USEG, SGMT, 28 million shares, I think they're still considered small caps. I don't remember what the definition of a large cap was, like what their market cap needs to be to make them be considered a large cap. I don't remember that information, but trading stocks like Tesla, Nvidia, the big stocks, some of the prop firms trade those. And I remember watching SMB Capital on YouTube as one of the prop firms that puts out a lot of information. It felt like a hopeless game though, because you're battling algorithms, right? If you put out a large buy order, some of these stocks will they'll respond to that before you can even blink. All of the algorithms that are around in large caps and all the market makers and hedge funds. Not to mention, when I watch SMB Capital, they're talking about how all of their traders on their floor have their own customized software that pings them and tells them when to enter trades, exit trades. They have their own algorithms running to pick out the best stocks for them, and they only trade those stocks. It's a much different world. But right here again, it's a little bit frustrating to not be able to trade those when there's such obvious setups, right? We have we have an entry candle here for the bounce off of the 9 EMA. This is a 5-minute close. So right here, this transition is a close from this micro pullback on the 5-minute. So you could buy with the 150 as a support. It dips down below 150 here, but you buy for the break. And it goes from 150 all the way up to 165. Yeah. That's also what Ross has said before, why he doesn't trade large caps, or he doesn't trade higher floats and thickly traded stocks, because part of his edge is reading level 2 and reading time and sales. And it's hard to do that when it's so thickly traded. If the stock is moving slowly, then not, level 2 isn't really as valuable. Your edge decreases. USCG. Yeah. It's just like, how do you read this? You don't. You see number go up or number go down. I can see some big. I think when you are looking at these, I think the prop firms, they look at the bid more than they look at the ask, because what they want to see is they want to see support on the bid. They want to see buyers there. The ask doesn't make as much of a difference, because as long as there are bidders, the price will eventually go up because there's demand, right? So when they're holding, they just want to make sure that the price isn't falling out from underneath them and they have people there. Like right there, I saw a 50,000 share buyer pop up on the bid there at like 158, 159. And as soon as I saw that, then the price went up 32,000. So there's, you see that support there at 159. $158. It's getting eaten up though. $70,000. So you saw that support down there, 158, that 50,000, 60,000 share bidder. So you could have taken that as like, all right, well, this is a spot to buy. As long as it doesn't fall out, your stop would be like 156. And then you could say like, well, you can expect it to at least come back up to high of day. You can make 5 cents. Or if it breaks high of day, then you can continue holding. But I think that's kind of the way that those prop firms operate. They like to see the bidders at certain levels of support. Just my speculation from watching their videos, though. They did talk about that a little bit, but since it popped up and failed here, now those bidders might end up, that support might end up falling through. Still quite a few bidders there, 157, 70,000. They could have, yeah. Most of these stocks have been having that MX spoof order pop up still. He's still not gone. Let's take a look at some of the stocks on the continuation scanner. No. FGI. No volume. This is too expensive. IAS curling back up a little bit. Yeah, not much going on today other than these higher float stocks. 10 minutes to 8:30. Theoretically, I guess you could have spoof orders on the bid, not just on the ask as short sellers. I guess if you placed a huge buy order down at $half or whole dollar, that could be a signal, like you're trying to signal buyers to try and lift the stock up. I guess it could go the other way too. I've never really paid, like it's difficult to pay attention to both the bid and the ask at the same time though. Like I'll mostly watch the ask like Ross and then glance at the bid. It's harder for me to pick up on that, but I haven't seen that as often. I wonder how that would affect algorithms though. Like these short selling algorithms, if somebody placed like 100,000 share bid order a few cents below, I wonder if the algorithms would pull their cells away. Fight fire with fire. I think there was someone on a podcast talking one time about how they artificially spike certain prices stocks with enough capital. You're not supposed to do that. I think they were talking about how they would put a couple $1 million into just artificially driving up the price on some stocks. You get all the retail traders to jump on as the price is going up, and then you just unwind your position at a certain point after it's high enough. Yeah, I'm sure you see it way more in the crypto market. Yeah, I can imagine there's a lot of gurus out there that they get into a small cap stock, they press the buy order, and then they have some sort of other hotkey on the side that a separate account fills out like a 500,000 share order, and it's like, oh, look how much money I made on this account, but it's actually just money transferring hands. Oh man, I can just imagine it. You pump it with your own capital. I mean, it would be extremely risky, but you could do it a few times and get away with it if you had a lot of capital, I'm sure, and then just walk away. But you pump a stock with your own capital, you get all the retail traders to hop on, and then on another account you go short, and then you suddenly just start dumping shares. Oh, that would be so scummy. That's got to be illegal, right? That has to be illegal. I have no idea if it is, but you would think it would be. I don't know if there's anyone enforcing I can imagine so. That's why I have don't mirror trade me on the screen. I don't want to get banned. But I wonder how much the SEC is enforcing rules right now. See, who's in charge of the SEC? Paul Atkins? I've never heard of him. $8.30. Taro popping up here. Million share float. Might just be continuation though. Oh, we're in a huge window here, all the way up to 18. $70. Might be interesting if it gets enough volume. So Paul Atkins was sworn in and nominated by Donald Trump in January 2025. So he's the lead of the SEC right now. My guess is probably not very much enforcing going on. Toro on a side chart and watch it, but AI headline in it. I mean, they're just sticking AI in there, but lower price once again. IT stock. Let's see anything other than this, though. This has pretty significant volume. Now we have GLND popping up, though. It's an agreement. Whoops. GLND. This one's a 15 million share float. Huh. Yeah, why would you reduce the monetary penalty on breaking the rules unless you want somebody to break rules? It's like if you've ever watched The Simpsons and Mr. Burns is stuffing toxic waste into the trees, and they come arrest him and bring him before the judge, and he's like, "That'll be a $1 million fine," and he's like, "Smithers, just reach into my pocket," and he pulls out his wallet and gives it to the judge, and then he gets let go. Kind of like that. You reduce the penalty, corporations will just pay for the penalty when they break the rules. Just a drop in the bucket. You know, is high float the theme? What's going on here? We're close to the 200 EMA, which is at 965. As an agreement headline. Having a ton of higher floats moving today. If this gives me a good VWAP setup, I might consider it. I like the headline. It is a fossil fuel company, though. So we've just been watching and waiting. Everything that's popped up today has been higher priced or lower priced or higher float. So nothing has popped up yet that meets my criteria for trading. That is unfortunate. I hope that doesn't carry on for too long because it's very damaging for the markets in the long term. Yeah. I mean, it wasn't long ago that uh, Trump was saying to some reporters in the Oval Office that the world is turning into a casino. It seems like they're pretty supportive of Polymarket and Kalshi and all this type of behavior that's going on. And yeah, most of uh, most of what's been going on is just wealth extraction from the public. Retail traders, 99% of retail traders don't win in most of these markets. So GLND kind of curling back up here. 40 seconds left on that 5-minute candle. It is interesting how much range this has for a higher float. Breaks through 770, goes all the way up to 820. 50-cent range almost. Part of me wishes that I had started trading back in the first surge of volume back in COVID in 2021, like 2020, 2021, because then I would have gone through the COVID boom, and then I would have gone through the crypto boom, like back in 2025 when the crypto markets caused that super hot market. Right now, learning to trade is, I'm going to be honest, it is a little bit risky considering how volatile and how much things have changed, like how volatile the market is and how much things have changed just in the past year. I don't think the US markets are going anywhere, uh, but there's a lot of uncertainty going on right now. My thought is even if the US stock market ends up crashing at some point, someone else is eventually going to pick up the ball, right? I don't know who that would be, but almost most most countries have their own stock markets, I believe. Like I know Canada has the TSX and Israel has their own stock market. There's a lot of countries around the world that have their own stock markets. They're just not as traded and as volatile as the US stock market is because the US has kind of been the leader, the financial leader of the world, being the central reserve currency. And the fact that the US is so diverse and at one point was an industrial superpower before it just became the reserve currency. But even if the US stock market fails, then it's possible that, investors might switch to another stock market in another country. And it would be very easy for them to develop the tools as long as the volume is there. I don't think the US stock market is going away anytime soon. It's just a question of whether or not the United States ends up remaining as the global economic superpower. At one point, I think Britain was the superpower of the world, and then it became the U.S. after World War II because Britain overextended their resources. They were in a lot of debt. Now the U.S., if they don't do anything about their significant debt that they have on their shoulders, it's kind of unknown what's going to happen. And I'm by no means an expert on any of this. This is just things that I've heard. There are a lot of doomers out there. I'll um, I'll admit that there are people who've been saying the stock market is going to crash for how many years now, and there are one or two incidences where it did happen, but there's doomers all the time. The way I'm treating it right now is if it happens, it happens, but if it doesn't, then this could be a worthwhile investment. And even if it does happen, it's not like all hope is lost because then there will be demand in other markets around the world. We're curling up here. We got a pivot at around 817. 20 seconds left on these 1 minute and 2 minute candles here. I did say that since we got nothing else moving, if this gives me a good VWAP setup, then I might consider it. but my conscience is telling me that I shouldn't. That discipline muscle is telling me that I shouldn't because it is higher float. But oh man, I want to. We'll see. I'm not going to, actually. Discipline muscle is telling me no. Higher float, I shouldn't. We'll see if it would have worked right here. Because I would have gotten in maybe like 25 shares, and if it breaks through this pivot here of 818, I would have added. Because we got a hammer like after kind of a retest here. This would be the retest of VWAP. I would have added. Got a seller popping up there at 830. So I would have made a bit of profit there, but it's not that much. I probably would have bought 50 shares with an average price of maybe like 810. Sold half up at 840 and probably sold the rest as it came back down. It might have been like 15 cents a profit, 15, 20 cents. So I don't feel that bad. I think it's honestly better that I just listen to my discipline muscle and not trade something that's higher float. Like, could I have made a little bit of money there? Sure. I would have felt guilty if it went all the way up to 9. But it's probably just better that I focus on accuracy. We got 5 minutes to 9 a.m. So we're kind of creeping up to this pivot here at 840. If it breaks 840, then 850 might go up to 9. I don't think I want to take a trade on it close to 9 a.m. though. Because if anything comes out at 9 a.m. that's worth trading and it has volume, then it's going to steal volume from this. This is definitely the hardest part of trading in a cold market, though. It's just sitting around and waiting for things that meet your criteria, for what you can trade according to your rules. When I was a competitive gamer, I used to wanted or I used to want to be a master at everything. I'd want to be a well-rounded type of player. And part of me is wanting to do that with trading. Just trade a bunch of different strategies, but it doesn't really work that way. It hurts me to see stocks moving outside of my strategy because it makes me feel like I'm admitting defeat. Just leave it alone though. Can't trade it. Let's see, it's 9 a.m. Watching the news. Do 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 do. This stock has got a bit of a flat top around 840. 841. Got a minute 30 left on that 5-minute candle. I would expect that if it continues holding, kind of got some ascending support here almost. Really. But if it pops back up here, 5-minute candle will form a bit of a hammer for this flat top. If it breaks through, then it would probably surge up to 9. I won't be taking a position on it, but I am watching it. At this point, if I make a mistake entering into something that's sub quality, it's just going to end up as a red day. So it's 9 a.m. We don't have time to recover the loss at this point if we make a mistake. Doggo woke up because he heard someone moving around upstairs. Hey, buddy. What's going on, buddy? What's going on? Do you hear the people upstairs? People upstairs. Yes. You hear Granny, Grampy upstairs. Boy. Holy. Buddy. I'm gonna let him upstairs quick. He wants to go upstairs. Upstairs? Alrighty. So, last chance is 9:15. If we don't get anything at 9:15, then I'm just gonna call it. I'm not trading anything at the open because I don't have a cushion. So we'll see if we get anything at 9:15. Otherwise, I'll just have to call it a no trade day. On another note, I have been monitoring the PDT rule changes in some of the platforms and brokers and stuff that I've been looking at. I took a look at Questrade Pro, but in its current form in the beta right now, it doesn't even have hotkeys. So it's a bit unfortunate, but until they come out with hotkeys and like more functionality and stuff, it doesn't look like Questrade Pro is going to be an option for me at all. They only recently released their beta to the public, but it doesn't look very good right now. And then I've been paying attention to Centerpoint Canada to see if they're going to reduce their $30,000 minimum account size down, but I haven't seen any news on their website talking about the PDT rule. So I don't know if Centerpoint is still kind of a gray area as to whether or not they're going to reduce their account size minimum. It's not a part of the US, so it's not like they have to. Like they're not subject to the PDT rule. So there was no reason in the first place why Centerpoint Canada couldn't have reduced their account size down. They might just keep it at $30,000. I haven't seen them talk about PDT rule at all. So for now, my only option basically remains to be Trade Zero Canada and Webull Canada. So I'll be trading with Trade Zero. But with this type of market, I mean, is next week even the best time to start trading with real money? I don't know. Depends on how this week turns out. It might be best to delay going back to real money. But at the same time, I want to be emotionally ready for trading when June comes around, because that's when I think that we might start seeing the market heat up again in small caps, when all the retail traders enter and we see the spike in volume. But considering my mistake last week, I'll have to be very careful with how I trade. I don't make any big mistakes. And if I lose quarter size back, if I start trading with real money, then I have to come back to the simulator. I don't want to lose my entire account. I was hoping to get some practice in this week with scaling so that I could feel a bit more comfortable. I doubt we're gonna have any more action at 9:15 here, so I'll just show this now. I've showed this Excel sheet before, but I went over it again. These are like all my position sizes and stuff, and I reduced my max position size, like my max risk on $10 and above accounts even further, because it just made more sense to me. So this is not 15 anymore, this is 10. If I were to trade with a $200,000 account size in the future, then, my share sizes on my hotkeys would be 1,000, 5,000, and 20,000, which is kind of the hotkeys that Ross uses. I think he has a 2,500 hotkey as well, but that's what I included here. So Alt S, I included 25 shares, so this would be 2,500 shares. So I would have 1,000 size, 2,500 size, 5,000 size, and then 20,000 max size for all of my hotkeys. This is what I wanted to practice this week, scaling using these hotkeys. So if I just wanted to hop into something without being, completely accurate with my position and giving it a bit more room to move, then I might hop in with like a 25 share starter, which is 1/8 max position size, and then add a little bit up to quarter or half size if trade continues working. So I wanted to practice scaling in and out with my position sizes and stuff. Mainly with the goal to reduce those drawdowns that I've been having. I want to focus on keeping losers small and adding to winners. And also if I can use smaller share size to enter in a bit early, then there's less of a risk of the trade turning into a loser if it suddenly turns around on me. But that's my updated sheet after thinking about it for a while. So in order to reach my goals, it's mainly going to be about, being aggressive when, like, putting my foot on the gas when it matters and taking my foot off the gas when we're in a cold market like this. And also trading with smaller share size for setups that I'm not as sure about, but I have the potential to make money on them. So when I thought about it, like when I went back and I looked at my VOD for whatever day that was on Wednesday, I don't remember what stock that was. Pull up my recording. Roll. Should have been the 22nd, right? eGPU. Sync my date and time here. When I went back and looked at this, what I could have done, if I wasn't sure if there was a news headline or not, but it wasn't working, but it was moving quickly on this 10-second, what Ross sometimes does is if the stock meets all of his criteria, he might just jump in with like 1,000 to 2,000 or 3,000 shares just as a starter. So like as the trade was working down here, I could have jumped in with small share size, and on the first pullback, could have sold and then added back just with small share size to create a cushion, and then I would have been a little bit more confident on the second pullback as it continued to work. Even though that I couldn't see the news, doesn't mean that I can't trade it with small share size if I'm not sure, because then you're risking less. Trading with 1/8 share size gives you a lot more confidence to just jump into something than trading with quarter share size. Even though quarter share size is already small, even if you trade here with 1/8 share size and then add to it to make it a quarter, 25 shares, if it moves 50 cents, it's not nothing. It's still a bit of a cushion. It could still be potentially a $10 cushion. And then once you have that cushion, you can be a little bit more confident of getting into something when it's moving quickly, even if you're not absolutely sure about something. Set on my charts here. That's the idea anyways. That's what I wanted to focus on. As long as I have stuff that meets my criteria that I can trade and practice with, then my drawdowns should, as long as I follow my rules, my drawdowns should be small and my winners should be bigger, as long as I can be aggressive when I see the opportunity to be aggressive. But right now on my So my trader view, before I made these changes, my drawdowns are bigger than my winners in general. So that needed to change. ELPW coming back through VWAP. ELPW is a bit of continuation here. Made a move up to 470. So it's 45 seconds or so for the opening bell. Probably won't take any trades at all. I'm just curious, see what happens here at the open. By AAS, the best thing would be for dip off of VWAP because the 20 EMA is down here, which we kind of have levels of support on the 5-minute, the 9 EMA, or the 20 EMA on the 2-minute, the 20 EMA on the 5-minute. ELPW is a bit of continuation, but so I'm just looking at this theoretically for entries if I were to enter. So we bounce off of the 20 on the 9 or on the 1-minute. Pretty nice move, 45 up to 155 or so. I red to green on the 10-second. I said that a part of my rules is that I don't trade the first few minutes of the open here because it popped up and now it's pulling back. A bit volatile. ELPW is banging up against that high here up at 472 at daily level. Quite a bit of volume at the open. So it's actually 7 seconds left for this 2-minute candle to form. So if it holds 150 here, you might see a move higher. Ends up dropping down. I probably wouldn't have taken an entry there because of this topping tail on the 2-minute. If it closes as a hammer without a topping tail, then that would have been an entry. But since it didn't, it wouldn't have been. So first 2-minute candle was a fail. So you'd have to see an entry on the 1-minute or the 5-minute. ELPW selling off a little bit after breaking that high. My AES sold off here, but it's bouncing off of this 20 EMA on the 5-minute. $30 left on this 2-minute. So a starter for the entry through 137 would be interesting here. I'd probably take a starter here at 140. Looking at this 2-minute candle, like 139 or so. Then it would just be a small starter, and then I would add to it depending on how this candle forms. If it breaks 145, if it breaks down below VWAP, I would sell, but we break above, so I would add at 145, looking for the breakthrough 150. Is it stalling out around 150? I might take profit there. Probably sell half and see what the rest does. Would probably take the rest of it, considering the amount of sellers up at 150. It's stalling out a bit. Especially if I saw it pop up there and then reject like that, I would take the rest. So if I were to take this, probably entry at like 138, 139, add at like 143. Average cost basis might be about 141. Sell at 140, 147. 5 cents a profit on a $1 stock. So the reason I would have seen this is because of this red to green here with this bottoming tail for the bounce off of previous levels of support here in the 20 EMA and VWAP. So I'd buy for the break back through VWAP on the 10-second starter add, and then take profit as it stalls out. It did end up eventually breaking through 150. So if I had the guts to hold longer, if I had a cushion, and it looks like it would have worked all the way up to 160. You can see the very obvious entry candle in the 2-minute. I would have bought for the breakthrough VWAP, anticipating that this entry candle would cause more volume to break it through 150. Down here, MACD did cross over for a brief second, but not big of a deal in the end. That trade would have worked, but I didn't take it because I have no cushion here. It's part of my rules not to take any trades at the open without a cushion. But this would be part of my bear trap setups for or a VWAP retest. The VWAP retest on the 2-minute here, but it's a bear trap on the 5-minute and a bear trap on the 1-minute. All right, though. I think that's going to be it for me. I'm not taking any more trades or any trades at all. It's just a no trade day. I haven't had very many no trade days so far. So I think it's probably a good thing that I have some no trade days. Because if I never have no trade days, then that means that my quality standard is too low. And my accuracy hasn't been that great so far. So it is about time that we have some of these days where I just decide not to trade anything because there's, I don't want to lower my quality standard and go in the red. So I'm going to call it here. Thanks to everyone that stopped by today and watched the stream. But I'll be back at it again tomorrow morning, 7 a.m. Eastern Time, as usual. Until then, stay green and take care. I'll see you next time.